Joining us right now to talk markets, tariffs, the Fed, deal-making, and much more is Peter Orszag. He's the CEO of Lazard. He's also former director of the Office of Management and Budget under President Obama. And we've been discussing all these important issues just as you sat down, Peter, including your incredible rating that you've got of 4.89.
Working in it. Yeah.
Almost 4.9, right?
Getting there,
That's pretty good.
Step by step.
And it has nothing to, now I'm finding all this out. If you,
not about tips.
It's after you tip.
I didn't know that, but I guess
so you've been a really big tipper.
Well, now you know. You can, exactly.
The tipping part is not
that money
issue.
back. We have to. I'll call up Uber.
Peter, let's talk about I guess maybe the most pressing situation today, and that would be where things stand with the trade tariffs. This meeting that is set up with China in Switzerland over the weekend. How are you reading it?
Look, we have I think the pause was beneficial for a variety of reasons.
90-day pause.
The 90-day pause, but the administration, we really need to get to yes with, someone. I think the meeting with the Chinese is encouraging because that situation is not sustainable, but it's not just with China. We need to get to yes with the EU. This really comes down to, we talk about 70, 80, 90, 100 countries. It really comes down to maybe a dozen. It's the EU, it's the UK, it's Canada, Mexico, Japan, India, China, and a few others.
South Korea, maybe.
The Falkland Islands we could kind of survive if we don't have a trade agreement with. But we need to get to framework agreements with the most important trading partners in this 90-day window. So that
we're not going to get that with China.
No. But let's talk about China. My expectation is we're going to get to a average tariff rate of somewhere between 30 and 50%, either because there is a Xi-Trump summit ultimately and there's a deal. I think that's less likely, or because we just wind up exempting more classes of goods from the tariff rates, so that you wind up with somewhere between 30 and 50 on a weighted average basis. We've obviously already done that with electronics, and we may need to do that with other categories also.
That's pretty interesting because that creates these clear winners and losers, and maybe disincentivizes the idea of trying to bring manufacturing back here.
Yeah, well, and also very strong incentives for transshipment, which we are already seeing. So when you have wildly varying tariff rates, there is an incentive to ship through Malaysia or through other countries that may have a lower tariff rate with the United States, and administering that or monitoring that is very difficult.
What do you hear from business leaders you're talking to at this point? How
desperate
optimistic?
For clarity, desperate for some stability, because we've got strong underlying drivers both of the economy and of deal activity, and then this headwind of uncertainty as this plays out. But it varies by sector. Obviously industrials, transportation, consumer products, much more affected. The oil majors and the hyperscalers have a different set of dynamics.
Are you more worried about a slowdown or inflation, or equally worried? I
think the Fed's in a tough spot. What I would say is I don't think the Fed's going to be cutting rates. It obviously can cut rates for one of two reasons: either confidence that inflation is coming down, or concern about the economy.
Or both.
Yeah, but I don't think the Fed is going to be cutting rates in 2025 because of confidence that inflation is coming down.
You don't?
No. So any rate cuts will be bad news.
That's a very interesting perspective. So if markets are up right now because they think the Fed is coming to the rescue, that's a miscalculation.
No, but the rescue might be that it's bad news.
Right. It's a miscalculation.
I would not read into that anything
Yeah.
positive. That would suggest the Fed is concerned about the state of the
in
economy.
a perfect world, wouldn't you want rates as low as you could get them if there was no inflation, just to spur activity and just, mortgages and...
Sure, yes, but...
And it even helps inflation when rates are down.
I don't agree with that part, but
you know what I mean, though. If you're paying less on your mortgage,
Turkey tried that, by the way.
Right,
but if work out.
I understand that it spurs economic activity, which in the long run could bring more inflation. But if you're paying less on a floating rate mortgage, and if you're
look, I think everyone would be in favor of lower rates to the extent that they are
zero would be nice.
Consistent with stable inflation, and there are signs that inflationary expectations are ticking up a little bit.
What about oil?
Oil helps. Lower price of oil helps on headline inflation, obviously.
Can I just ask you about the regulatory environment?
Sure.
Because part of the whole argument about our economy taking off was going to be that the regulatory environment sort of just opened up in this big way.
Yep.
You work with companies that consider all sorts of transactions that would otherwise be regulated or at least need a regulatory approval. Has your complete Has there been a shift in terms of how you think about that, or no?
Well, we were always a little bit more measured in terms of there would be a move away from the big is bad kind of perspective. I think that is happening, but it was never going to be, anything goes. The biggest change, in my opinion, will still be with regard to vertical deals as opposed to horizontal deals. There was always antitrust enforcement against horizontal deals. The biggest shift under the Biden administration was the way that they handled vertical deals. And I think in general, those will be, you'll go back to a more traditional perspective there, with the exception of in the tech world where the dynamic.
Okay, now I got a more complicated question for you. If you are a client that's going to go up against the government potentially, do you use one of the law firms that did a deal with the administration, or do you not? And when the client calls you and says, you have a choice. You can use Paul Weiss, or you can use Skadden, or you can go use, they made deals with Trump, or you can go use Wilmer Hale, which is effectively fighting the administration and so far winning. You choose, you tell them what?
The choice of advisor, the choice of a law firm often is a little bit less about the institution. It's more about the specific person. So there's not one answer to that question, because it depends on who the person is at the various law firms that you're considering and whether your trust in that person outweighs the kind of macro background on this firm or that firm. I don't think there's one answer.